Terrorism insurance is one of those niche coverages most people never think about until something happens. But for many businesses, especially in large urban centers or high-profile industries, it's a critical layer of protection. So what exactly is terrorism insurance? At its core, terrorism insurance protects against losses resulting from acts of terrorism, typically defined as violent acts committed for political, ideological, or religious purposes intended to cause mass disruption or fear. What does it cover? Most terrorism insurance policies are designed to cover physical damage to buildings, business interruption, and loss of income caused directly by an act of terrorism. It can also include liability coverage if people are injured on your premises. But there are important limits. Policies typically do not cover things like cyber terrorism, war, or domestic terrorism unless specifically added. And coverage often kicks in only if the event is certified as a terrorist act by the US Department of the Treasury under the Terrorism Risk Insurance Act, or TRIA. So who buys this type of coverage? Terrorism insurance is most commonly purchased by real estate owners, large hospitality operators, sports venues, financial institutions, utility companies, and event organizers. In short, any business that could be targeted because of its size, visibility, or location. Now, how is terrorism insurance priced? Pricing varies based on perceived exposure. That includes geographic location, like being in a major metro area, building occupancy, the size and profile of operations, and proximity to high-value or symbolic targets. Following events like 9/11, pricing initially spiked, but over time it's become more stable thanks to TRIA, which acts as a federal backstop for extreme terrorism losses. Underwriting terrorism, insurance is different from traditional property lines. Insurers evaluate geographic risk concentration, potential casualty exposures, and aggregate exposure in a particular city or zip code. They also assess building construction, security protocols, and tenant risk. Some insurers use catastrophe models that simulate potential terrorist attacks to help underwrite portfolios. And what does the claims process look like? It starts with an investigation and a certification. A terrorism act must be officially recognized by the US government under TRIA to trigger most standard terrorism coverage. From there, the claims process follows traditional property and casualty steps, assessing damage, evaluating business interruption losses, and coordinating with forensic accountants. But because terrorism losses are rare and highly complex, the process is typically more meticulous and time-consuming than a regular property claim. So what's next for terrorism insurance? While frequency remains low, geopolitical tensions and mass violence events keep the need for terrorism insurance top of mind, especially in dense commercial areas. Insurers continue to refine how they model and price the risk. And as the threat of cyber terrorism grows, expect hybrid products to emerge that combine both physical and digital protections. If you found this breakdown helpful, give us a like, hit subscribe, and follow Insa Knowledge for more insights into the world of property and casualty insurance explained simply.